Welcome to Concept Craft. We are presenting step-by-step videos training to crack your certification exam, so you can gain the confidence to take on any accounting challenge. Now let's begin our today's lesson. Inventory management. Learning outcomes. In this lesson, we'll cover the role of inventory management and enabling inventory tracking. Topics: Inventory tracking basics. First in, first out inventory tracking in QuickBooks Online. Enabling inventory tracking in QuickBooks Online. Taking stock of inventory. Businesses such as retailers, wholesalers, and distributors need to fulfill orders quickly to meet customer expectations. The business also needs to know what inventory items they have on hand, how much they're worth, and what profit they're making on selling that stock. This requires a good understanding of inventory management and a tool that can manage inventory effectively. How can QuickBooks Online help? Inventory management and tracking in QuickBooks Online can track the quantity, purchase costs, sales revenue, and cost of goods sold for inventory items. Note that the inventory features discussed here are only available in QuickBooks Online Plus and Advanced subscriptions. Inventory tracking basics. QuickBooks Online uses FIFO for inventory tracking, which means that it always considers the first units purchased to be the first units sold. It will then adjust inventory and cost of goods sold (COGS) accordingly whenever inventory is sold. Here are some key points about working with inventory in QuickBooks Online. The value of an inventory item in a QuickBooks Online company is the amount that was paid for it. Recording the purchase of an inventory item increases the inventory asset account on your balance sheet by the cost of the item and increases the quantity on hand units for that item. Recording the sale of an inventory item decreases the inventory asset account by the original cost of the item and decreases the quantity on hand units for that item. Recording this sale also increases the cost of goods sold (COGS) account by the original cost of the item and increases the sales of product income account by the amount the customer paid for the item. The difference between the income amount and the COGS amount is your gross profit on that item. Pro Advisor tip. There are several third-party apps that expand upon QuickBooks Online's capabilities. Some track product expiration dates. Other apps track sales orders, lot numbers, serial numbers, reorder points by location, landed cost tracking, barcoding, units of measure, back order reports, RMA process, and LIFO/FIFO/average cost tracking. To help your clients choose the appropriate apps, you'll need to understand their inventory requirements. First in, first out inventory tracking in QuickBooks Online. Now let's explore in more detail how FIFO inventory tracking works in QuickBooks Online. Each purchase becomes a cost layer, where QuickBooks Online tracks the quantity purchased and the unit cost of that purchase. As sold items are saved in an invoice, the COGS value that is posted will be the cost of the oldest cost layer. Select the highlighted areas to see a worked example of how FIFO operates in QuickBooks Online. A client purchases 10 units for $10 each. While they remain in inventory, the units are considered assets and are valued at cost. Current inventory. 10 units at $10 each. Total assets. $100. Total COGS. $0, none are sold yet. Note that QuickBooks Online has created a cost layer for this purchase, with all units in it valued at $10. The client launches an advertising campaign for the product. In anticipation of greater sales, they buy 20 more units from the wholesaler. However, the price from the wholesaler has gone up to $12 a unit. When the purchase is recorded, QuickBooks Online adds $240 to inventory assets and creates a new FIFO cost layer for this purchase, with all 20 units in it valued at $12. Current inventory. 10 units at $10 each, 20 units at $12 each. Total assets. $340. Total COGS. $0. A customer purchases 8 units. Because the client bought the $10 units before the $12 units, QuickBooks Online applies the FIFO rule. It reduces inventory by 8 units and increases COGS by $10 for each of the 8 units in this order. When the sale is recorded, total inventory assets decreases by $80, and COGS increases by $80. Current inventory. 2 units at $10 each, 20 units at $12 each. Total assets. $260. Total COGS, $80. Another customer purchases 5 units. When the sale is recorded, QuickBooks Online applies the FIFO rule and reduces inventory for the remaining $10 units first. Since only 2 of those units remain in inventory, the other 3 units for this order are valued at $12 each. Note that QuickBooks is drawing inventory from 2 different FIFO cost layers. You can tell how many FIFO layers are affected by looking at the transaction journal. If there are multiple lines affecting both inventory and COGS for the same inventory item, each line represents a different FIFO layer. Inventory assets are reduced by $56, 2x $10 plus 3x $12, and COGS is increased by $56 on this transaction. Current inventory: 0 units at $10 each, 17 units at $12 each. Total assets: $204. Total COGS: $136. Enabling inventory tracking in QuickBooks Online. Setting up QuickBooks Online to start tracking inventory is quick and easy. From the gear icon, select Account and Settings. Select the Sales tab. In the Products and Services section, use the slider to enable Track Inventory Quantity on Hand. Select Continue in the pop-up window to confirm. Notice 2 other settings in this section: Show Product/Service column on sales forms and track quantity, and Price/Rate. Show Product/Service column on sales forms adds a Product/Service column on sales forms so your client can choose from a list of products and services to include. This setting is on by default. Turning it off disables inventory tracking, purchase orders, and the ability to use items on both sales and purchase forms. Track Quantity and Price/Rate adds quantity and rate fields to sales forms so that your client can track this information for products and services. This setting is also turned on by default. If your client turns it off, they also turn off inventory tracking. Check that both these settings are turned on. Finally, select Save and then Done. When inventory is turned on, QuickBooks Online automatically sets up an inventory asset account. You or your client can add other current asset accounts for detailed types of inventory to segment different types of inventory items, such as different lines of products. Summing up. Learning outcomes. Well done. In this lesson, we covered the role of inventory management and enabling inventory tracking. Knowledge recap. You will now understand how to use inventory management to track the quantity, purchase costs, sales revenue, and cost of goods sold for inventory items. You can also turn on inventory tracking for your clients and make sure that it's working properly so that their reports related to inventory are complete and accurate. Next steps. In the next lesson, we'll look at setting up new inventory products and categories.